Okay, Bismillahirrahmanirrahim. Let's start with the question. Okay, this is the question that is related to club and societies. And for that, what we have done so far, there are basically three requirements in this particular chapter. Number one, that is to prepare the receipts and payment side. And number two, the income expenditure account. And the third one is the balance sheet, that is statement of financial position. Okay, so far we were done with that is the first thing that we need to do in this particular question, that we need to prepare the subscription account, which we successfully prepared it, in which we put it the opening balances and the transaction during the period, and then finally we calculated the closing balance.
Yeah.
So this is something that we have already done. Now there is another requirement in which it states that we need to prepare the income statement, that is a trading account. Remember, there might be some activities that the club and societies might be carrying out. So what we have to do, we need to make an income statement separately for those activities which we have done. For example, there could be an activity that the club has organized certain event, and there might be activity that the club might have some organized certain task, and obviously in that particular event of the task, the organization or the club will be selling something and will gain the profit or will earn some income. So in this particular topic, what you have to do, you need to prepare a separate income statement for that particular activity. Remember, it's not the income statement for the whole club and societies, it is basically the income statement for the activities we are going to calculate the profit or loss from the activities. Now let's see the question and see that what activity they have done. So basically they have done the sale of refreshment, right?
Yeah.
So it means there was an activity organized by the club in which they sold some refreshment, and their earning is 5200. So it means first of all we need to recognize the sales revenue with the amount of 5200. Now after sales revenue we need the cost of goods sold. Remember?
Yeah.
Okay, cost of goods sold. Amar, do you remember the main components of cost of goods sold?
Opening net purchases
Nice, very good.
and
Opening, net purchases, ending. Okay, so they are selling refreshment. So is there any inventory for the refreshment? Is there any is there any
yeah,
inventory for
inventory
the
of
refreshment?
refreshments opening and closing
Yes, the opening
463.
inventory is 400. The opening inventory is 400. So obviously the merchandise opening is 400, and we need the net purchases as well. We need the net purchases. Now let's see whether we have net purchases information or not. Whether we have net purchases for the refreshment. Is there any information which is available for the net purchases for the refreshment?
The amounts due to supplier. I mean, they have the amounts due to supplier. Otherwise, sales. No, 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 not sales. But suppliers of refreshments purchase. Yeah, supplier of refreshment 2,800. That one.
That is the payment which they have made out. So it means
Yeah. So we
that
have to
is.
make it 2 account.
So how to calculate the purchases? How are you going to calculate the purchases?
Purchase minus purchase return.
Okay, but since the information of purchases is not given over here, so how are you going to calculate the amount of
We have
purchases?
we have the opening amount which is be due to this supplier for the
Nice.
purchase.
Very good.
So I
Can
think
you please
balance
let me know that
balance.
what is this? What is this? What you
What?
will
What is
call this
what?
amount?
Owing. What do you call it? Accrued purchases.
It's
Uh,
accounts payable, right?
yeah, yeah, yeah. Accounts for mama.
Yeah,
Yeah,
it's a trade payable. Amar, do remember one thing.
yeah,
One tricky point that I told you earlier, that in while preparing the balance sheet, we always consider the closing balances, right? The another trick,
yeah.
the another trick that you need to remember, if you want to calculate the credit sales, if you want to calculate which sales,
Credit sales,
so remember we always prepare the receivable ledger. We always prepare the.
receivable ledger.
And if the purchases information is not given in the question, if the purchases information is not given in the question, see, so we always prepare the trade payable account. Are you getting a point?
Yeah,
So
trade
please do
payable.
remember, if you want to calculate the sales information, so we prepare the account receivable. If you want to calculate the purchases information, so we prepare
But
the
two
trade
minutes.
payable control account.
Can you wait 2 minutes? Sorry, my mom said 1 moment.
Are you getting a point?
Sir, please wait for 2 minutes. I'll be right back. 1 moment, please. Actually.
Okay, okay.
Yes, sir. Sorry. Yeah. Okay. Okay. Okay.
Are you back?
Yeah, yeah.
So can
So
you
you
please
said that if there's no if there's no sales info given, you're gonna have to make the account receivable, and if there is no purchase info given, you have to make the accounts payable.
yes, very good. In order to calculate the amount of purchases, what sort of information, what sort of
Opening
check that
inventory, sorry, opening purchases, like of opening the amount due, and then the
opening payable, right?
yeah, opening payable,
Nice.
and there is no closing payable. That means we have paid all our amount to the supplier, I
Excellent.
believe.
So obviously the closing payable would be zero, right?
Yeah,
Okay. Now opening payable is given in the question, closing payable is given, and if you just see on the payment side, if you just see on the payment side, you just see on the
supplier
payment
of
side.
refreshments.
Yes. If you just see on the payment side, have you seen?
Yeah, yeah, 2,800 supplier of refreshments.
Yes. Now, how we are going to make the accounts payable ledger. So let's prepare the accounts payable ledger over here. And while preparing the accounts payable ledger, first of all, we will put the opening balance, and accounts payable is the liability. So obviously the
Opening balance on credited.
opening payable will be on the credit side, right?
Correct. Yes, yes.
So what
So
is
that
the
would be
amount of the
around
opening payable? What is the amount of opening payable?
mm, amounts due to 150.
150, and the closing is 0, right?
Yes.
Opening is 150 and the closing is 0, and we have paid to the supplier during the period. How much amount we have already paid to the supplier? That is 2000,
2,800.
2800. So obviously this will be on the debit side, right?
Yes.
So can you please
So
calculate the
just
difference of it?
yes,
2650.
yes. My calculator. So 2800 minus 150 gives you 2650.
2650, right? So this is going to be the
Yes.
purchases which we are going to include it in the income statement. 2650. Now ending inventory, merchandise ending. So what is the balance of the merchandise ending inventory?
480. 480.
480, 480. So 480 is the merchandise ending. So opening net purchase is ending. Can you please let me know the cost of goods sold?
Yeah. So 400 plus plus 2650 minus 480. So oops. 400 plus 2650 minus 480. There, two for 2570.
Sorry,
2570.
2570.
70.
And can you please calculate the gross profit?
Yes, sir, which is 2630.
2630. Now remember, this is not the profit of the club. This is the profit of the activities which is being carried out. Which is being carried
Yeah.
out. That is the profit for those activities which have been carried out within the club and societies.
Or is
Now
there
we
a
are,
possibility that there could be gross loss?
yes, there could be a gross loss as well.
Oh my goodness, that's bad. Because you even get nothing on your gross profit and you have expenses waiting.
Exactly. There is a possibility that your expenses might exceed it. So obviously there could be a chance of gross loss, but this time it's a gross profit. Congratulations. So we are going to incorporate that profit. Obviously the profit of the activities, the profit of the club and societies. So now let's prepare the income and expenditure account. How the income and expenditure account will be prepared? There are two ways. Number one, either to make a T account, that is the income on the credit side and expenses on the debit side. At times, the examiner asks in the statement format. So it's quite simple. First of all, we will list down all the income that we have, all the incomes that we have. So if you can just see that, is there any income? Is there any income?
Income. Okay, yeah. So there's receipts. Yeah, we got subscription as income.
Yeah, and you remember the subscription income that we have already calculated, which is 3190,
Yeah.
right? So
Yes.
subscription income, we are going to add subscription income. Okay, any other income that we are going to include?
Any other income? I mean, we had. Sales from the refreshments.
Will the sales from the refreshment will be recorded? Will this amount be recorded?
No, we already got it for the gross profit. So
Yes, we calculated the profit from that refreshment, which is 2630, right?
yeah, if
2630.
0, that will be recorded.
Profit from refreshment. Refreshment.
Yeah.
2630. And what was the amount of subscription income? It was 3190. 3190. Can you please calculate the total income?
Yes. Income. So 3190 plus 5820. 20.
5820. Now, let's move on towards the expenses side. Income and expenditure account. Let's move on towards the expenses side. And expenses we have. What expenses that we have? Just look at the data that is given over here. What expenses do we have?
Expenses we have rent, wages, and
Excellent. Rent. Can you please note down the amount? Rent, wages, and other cost, right?
yes, around 1,400, wages 1,200, other cost. How much is other cost again? Other
320x.
cost?
370.
Yeah, 370. Okay, done.
1400, 1200, and 370, right?
Yes.
1400,
And,
1200, and 370. And it was
yeah,
wages,
rent 1400. Rent,
rent,
wages, cost.
wages, and
Other.
other cost. Okay. Any other expense that will be incorporated over here?
Well, we purchased equipment, so there has to be the depreciation of equipment.
Excellent. So there will be a depreciation that we need to recognize. Okay, how the depreciation will be recognized? How the depreciation will be recognized? Now,
Remove the opening value of the provision for depreciation of the present.
okay, first of all, we need to account for, we need to prepare a ledger for the property, plant, equipment, that is equipment. And
Yes,
first we will put the opening balance of the equipment,
that's what I don't know.
opening balance of the equipment, which is given in the question, right?
The valuation, so this is a valuation method.
How much it
The
is?
6,200 and now it's increased 8,100.
Okay, 6,200 is the opening balance, 6,200, and closing balance is 8,100, right?
1,100. Yeah.
Now, during the year, we bought another equipment, and the cost of that equipment is
Oh, that's what. Purchase of 3,800.
3,800. So, 3,800 is the equipment that we bought during the year, which is the purchase of equipment, and it will be debited. Now, there is no other information given. So, can you please calculate the difference between this?
1,900.
Sorry,
1,900.
1,900, and that 1,900 indicates what?
Depreciation expense.
Depreciation expense. Are you getting a point?
Yeah.
So 1,900 will be included in the income and expenditure account. 1,900 will be included in the income and expenditure account with the name of what? The depreciation
Depreciation.
expense. Now, can you please calculate the total of the expenses?
Yes, 1,000, 1,000. Yeah, okay. 4,870. 4,8.
4870, that is the total expenses. And can you please calculate the
950.
9
950.
950, and this will be known as what?
Surplus हो गया.
Surplus. This will not be recognized as a profit, instead it will be recognized as a surplus. Are you getting a point?
Which will either be reinvested back into this thing or what a non-profit organization, yeah, donated or something.
Sorry.
This will either be reinvested back into the
Yes,
organization
exactly. This will not
or
be withdrawn by the owners. This will not be withdrawn by the trustees. This amount will be reinvested into the society or club.
yeah.
Are you getting a point?
Yes, sir.
Okay, now Moving on to the another requirement, that is the balance sheet. And I told you, whenever we are preparing the balance sheet, we always put only which balances.
So what again?
Whenever we prepare the financial statement, financial position, we always put the closing balances. Are you getting a point?
Yeah.
Have you taken the picture of the question?
No, sir, I'll take picture. No problem.
Please take the picture of this
Mhm.
question.
Also payments also, right? No. Oh no, yeah, that's it. That's it. Okay, sir. Okay.
Done. Okay.
Yes.
Now, just let me know that assets. First of all, let's prepare the financial position, and first let's put the assets. Do we have assets?
Well, we got equipment.
Equipment. Now, the closing balance of the equipment is
8,100. And valuation is 8,100.
8,100, right?
Yes.
Okay. Any other asset that we have?
Well, inventory.
Inventory. And inventory
Refreshment.
closing balance. Remember, closing
480.
balance will be incorporated. How much?
Yes. 480.
480. Next,
We have bank.
bank. Very good. Closing balance of the bank.
1,420.
1,420. 1,420. Next,
Uh, um, I don't think we have anything else.
we have receivable as well. Subscription
Receivables?
receivable.
Subscription in arrears.
Yes, subscription
Yeah.
in areas shows that we need to receive that amount.
Oh, okay.
Are you getting a
I see.
point?
Yes.
So it's an asset and it will be on the asset side with the amount of
40.
40. Very good.
Don't think there's anything else now. Okay, so now we got assets.
How
Then
much
we're
amount
gonna
of
get
subscription is the amount of subscription receivable
40.
was 40.
40 or
Now,
40.
can you please calculate the total of asset?
Total, it would be what? No. Um, yeah, okay. So we got 8,800 plus 400.
Sorry?
Nothing, nothing. Oh, it's 8,100. So 8,100 plus 480 plus 140 plus 40. So 10,040. That is promising.
10,040 or 10,030?
10,000 10040.
Okay, that is the total assets.
Yeah,
Now,
it seems
let's move on to the other side of the balance sheet. That is the equities. Do we have equities in the question?
accumulated fund.
Excellent.
But there we have to find the closing balance.
Okay, so how are we going to calculate the closing balance?
Well, opening balance is given,
No,
and
closing assets minus closing liabilities.
closing, closing asset minus closing liabilities.
Yes,
So
so which
closing
means the closing
asset,
assets are given over here. That is the second column. Closing assets minus closing liabilities. There is only one liability which is over there.
yeah.
So can you please
Well, so
calculate?
there's only one liability. So liability is actually the advance one. So we have 10. We just have to subtract 10 from this. So 10,030.
10,030. Okay. So the
Oh
accumulated
yeah, it
total.
makes sense. Okay, 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 okay.
It's
Yeah,
an
it makes sense.
assets
Okay,
minus
because
liabilities.
yeah, the equation. Yeah, okay.
So it's 10,030. And then we have liabilities. Then we have liabilities. How much liability do we have?
How many?
How much liabilities do we have?
Around. I have only 10. Only 10
Yes,
liability.
very good. That is subscription in advance. Subscription in advance, which is 10, right?
Yeah.
So can you please total the equity side?
Yeah, so the equity side is 10,000 10040. So yes,
Are you getting my point?
yes sir.
Any questions so far?
No sir.
Okay. Can you please answer that part E?
Part E, the member of the club is worried that the surplus or deficit of the income expenditure account does not agree with the bank balance in the statement of financial position. Uh, huh? Oh wait, this is a good question. Wait. I think there's only you just have to find a account.
Sorry?
Wait, the question says. I need to read the question again because you won't be in the exam all the time.
A member of the club is worried that the surplus or deficit in the income and expenditure account does not agree with the bank balance shown in the statement of financial position. It means that the bank balance shows that we have, let's say, 500,000 rupees, but the surplus or the income and expenditure account shows a different amount. Why?
Yeah, that's the question. I don't know. That I don't even think I get the question to
Don't you
begin
think
with.
that receipts and payments side and the income expenditure side expenditure account both are same?
But they're different because SOFP is used for calculating for everything, assets, liabilities included.
No, there is
But
nothing to do
like,
with there is nothing to do with the statement of financial position. Here it states that the bank balance, the amount of the bank balance differs from the income and expenditure surplus. For example, in a bank balance, I do have 5 million rupees. But once I see the profit, that is the income and expenditure account, it shows 3 million. So it means income and expenditure account shows 3 million while the bank balance shows the 5 million. Why? What is the reason behind it?
uh, can you give me the answer? Maybe then I'll know.
The first reason is that income and expenditure account is prepared while using what?
Accrual
Accrual
concepts.
transaction. And while the cash book, that is the cash or the bank balance, is being carried out and it is prepared while using what?
SFP. Closing balances.
Closing balances, it means that is based on the cash balances. So
Yeah.
income and expenditure account, we use the accrual accounting. Accrual accounting states that expenses and revenues could be recorded even though it is not earned. However, income and expenditure account shows that you have to record the expenditure, whether it is paid or not.
Yeah.
Are you getting a point? The
Yes.
first reason is that we are following the accrual concept in the
Yes.
income and expenditure account, while
Okay. Wait.
the others are using the cash balances. Okay. Okay. Second reason. Can you please let me know the second reason that why the cash book and the income and expenditure account has the difference? What is the next reason?
So wait. Can you wait a minute?
What was the difference between in the receipts and payment, that is the cash book, and the income and expenditure account? You remember I told you the three main differences. There are three main differences between the income and expenditure
SFP.
and the cash book.
Sir, because like they're not supposed to agree. The second reason is that the no, because income statement has has non-cash items in the income statement. So like the surplus or deficit items can include like depreciation or the loss on the sale of assets. Yeah, something. And sir, capital receipts and the accumulated funds and the payments are also there. So these like basically affect the bank balance, but they are excluded from the income and expenditure account. Like the those capital receipts and the payments that they have, right? They're included. These like they can affect the bank balance, but they are not recorded in the income and expenditure account.
Okay, nice, very good. One more thing, that in addition to that, while preparing the income and expenditure account, we do recognize a non-cash transaction. Do you remember?
What?
Non-cash transaction like
Yeah, yeah,
depreciation
yeah, yeah. I
expense.
just said that. I said that. Depreciation
Yes,
expense.
yes, you're absolutely right. And another thing is that we are also recording the capital and revenue expenditure while preparing the cash book or the receipts and payment. But while we are preparing the income and expenditure account, remember there is no capital expenditure is recorded. No capital expenditure is recorded. Are you getting a point?
Yeah. Yes, sir.
Because of which the balance on the bank and the income and expenditure account will always be different.
Yeah. Okay. Yes.
Are you clear with
Okay.
this
Yeah,
point?
yeah, yeah. Yes, yes. I'm clear. I'm clear. That was a good question, sir.
Yes, it's a good question. I told you earlier. What you have to do once you're back, so please, it's a request that must attempt this question as well as Anjali. There was a question that was Anjali for which you have to prepare the statement of financial position. So these are the two tasks that you have to conduct. You have to do, okay?
Yeah. Okay, sir.
Any confusion in this chapter? So far you haven't practiced it, so there might be some confusion, but once you start to practice, inshallah, the confusions will be resolved, or if there is any concern or query, do let me know.
Okay, sir.
Okay, this was the maximum requirement from this chapter. Basically, three requirements are being tested. Number one, the receipts and payment, which we have already practiced in the last class, and the second, the income and expenditure account, which we have practiced over here, and the statement of financial position, which we also practiced in this particular question. Any other problem in this particular chapter or the question?
No, even the SRP seems easy.
Sorry.
Even the SRP seems easy.
Yes, it's easy. It's not a big deal.
Yeah.
Okay. In which other
So it's, yeah.
what could be the other topic for your revision?
Sir, the other topics I need is first off is I don't now I think I'm done with it. I think all I need maybe I need to revise is that in that chapter where there's accounting principles, there's like some other thing about inventory evaluation or something.
Okay, it's
That
a theoretical part.
no, the numbers part. Like they give you some kind of inventory. You're supposed to find something. I forgot about it completely.
Okay, inventory valuation. We can look into that one. Don't worry. Once you'll be back. So when you'll be coming back?
Sir, I think Thursday.